So, one thing that I never really see anyone talk about in the entire trading space is that transition from, you're learning stuff, you're going over your ICT videos, you're finding out what a market structure shift is for value gaps and all of this, but what that correct process to really go into trading looks like. Not just going in, buying a funded account, blowing it, and trying that over and over and over until you get lucky and pass it. And if you end up passing it, luckily, you're not going to be able to trade on your PA. You're going to be too scared to lose it. And so the correct conditioning that's required to say, okay, I'm now ready to take that next step. I'm ready to stop backtesting. I'm ready to tape read. I'm ready to go from tape reading to demo trading, from demo trading into live trading, and finally being able to fully execute. And that's something that I find really fascinating is that there's no traders talk about that, and everyone just regurgitates that same exact type of information of, okay, well, here's an inversion fair value gap set up with an SMT after liquidity. That's pretty much all you see on Twitter. And that stuff's great, but traders need to be able to have a clear direct route, especially from experience, and having the benefit of knowing that the process you're taking is the correct one. And I remember when I first started trading, I jumped in with real funds before I was ready, and I got absolutely destroyed. I lost everything multiple times over, and I made every mistake imaginable. Now, the benefit to that is I learned a lot, but afterwards, I had such a high level of mental scar tissue that I couldn't execute a trade. I couldn't hold a trade. I couldn't even, I was basically always a deer in headlights every time I went into the market. And being able to condition yourself out of that, to get over the mental scar tissue, to avoid the mental scar tissue in the beginning, because you're not just going to jump into trading and immediately be able to be good, right? I've seen maybe one trader that I've mentored do that, and where he is now, I don't know, because it's just how some people are. But anyways, the idea of buying an eval right after you learn some basic information is the absolute worst thing you can do. And you hear a lot of people talk about, oh, you need to rush right through that. It's not worth your time spending time on that. And that immediately tells me that they don't know what they're doing, and two, that they're gamblers. So here is what that process is going to look like. It's a pretty basic, bare bones plan, but you can't just go from watching one basic video and then all of a sudden, oh, I know what I'm doing, let's go trade with real money. You have to be pretty stupid to think that's what you're going to do, especially in the stock market, which is one of the hardest industries in the world. And in order to find out what the proper things to look for are, you're going to have to start with backtesting. And this is going to be the foundation to everything. There's absolutely no way getting around it. And fear, greed, impulsiveness, impatience, all of those things stem from not doing this. And I could talk about that for hours, but the only way you're going to get over scar tissue, the only way you're going to build confidence that you know what you're doing, the only way you're going to know what you're doing works is by seeing it in old charts. Seeing it work over and over and over again. Even if you go to a monthly chart, look at the Dow Jones and go back to from 1940 to 1945 and look at World War II and how that impacted the markets and what is being used there. Going back and understanding each and every situation, every single scenario that you're going to be in, and how you're going to react to that. And only once you know what you're looking for can we go into tape reading. And tape reading before demo trading, specifically, because if we just go right into demo trading and we start taking a bunch of losses, that's going to build scar tissue. Chris, it's demo trading. I don't have any emotions. We're going to go into that, but your tape reading is being able to see it work out in real time. I see the drawn liquidity up here at that buy side pool. How is it going to get there? Okay, well, I expect it to use this. Okay, how did it do that? And then you journal that, and then you move on to the next day. You have to do that over and over and over again. And it's only once that becomes boring. And only you're going to know the certain lengths. I can't sit there and say, yeah, you do this for this, and then this for this, and this long for that long, and all of a sudden you're good to go. Only you're going to know when you're actually ready, and it's important not to lie to yourself. And the best indication is when it's boring. So whenever I'm teaching someone and they're like, oh yeah, this is awesome, and that's immediately telling me that they're not ready to even go into demo trading yet, because they're not ready to experience no emotions. They're still excited. We don't want to be excited in our trading. We want to be very precise, accurate. We know what's going to happen, why it's going to happen. And if we win, we're fine. If we lose, we're fine because our risk is managed. But when we start getting amped up and hopped up on goofballs, then all of this is going to implode. And it's usually from one small loss that we're going to implode over for absolutely no reason. We shouldn't have a loss, and just because we're red, we're going to want to overtrade from there. That comes from impatience, impulsiveness, greed, and fear. You're having all of those come in because you didn't condition yourself through the correct process. Now, once you get into demo trading, it's not just going in, I'm going to throw on as many contracts as I want because it's not real money, and then I'm going to, just get a bunch of wins, and then I'm green, and then I'm ready to go. The correct demo process is very specific. And what we look for inside of that is, one, we have to follow a specific set of rules. And by following that specific set of rules, we're simulating that live environment. So we're going in presupposing we're not going to get out of this quick. That we know that this process is going to take us time. It's going to take us a lot of time and a lot more than we want it to, because we have to condition ourselves to every experience. And what I like to do with everyone that I've ever taught is I tell them, start your paper trading account at 50,000. You're going to manually lose 1,500. So then the account goes down to 48.5. Your max stop is 47.5. And you have to work your way back to 53,000 with max leverage of 1 mini. And by doing this over and over and over again, you begin to see consistency. Following that one specific model, taking one trade per day, and mastering that. The focus is on building it slow, building up good experiences, good journals, good trading to know how that feels. How does it feel to lose? How does it feel to build an account up slowly? How does it feel to watch an account go into drawdown and from that drawdown slowly compound? You're trying to trade a funded account, but inside of your funded account, you've never witnessed an account increase exponentially. You don't know what that's like. You don't know how to handle that. So when the percentages are staying the same, but now the money is increasing and half of your account balance is wiped out because you tilted on a day when you're trying to push too hard, and you're still good on that account, but how are you going to handle that? These are the things that we have to know. We have to know that we can build ourselves out of drawdown. And that's why we don't just set our starting account balance at 48,500. We manually lose that so we can watch the trades lose. We can see how they're not a big deal. And that process and building through the proper journaling that I taught, building a foundation off of that, not jumping in, losing real money, getting upset, getting depressed, getting demoralized. This way we can go in and see it. Now, let's say that you've been trading for a year and you haven't seen any results, and you're listening to this and you're like, well, why on earth would I want to go back to demo when I've put all of this time into it? And that's the exact reason. You've put all this time into it and you still suck and you still can't trade. You were never ready to go out and you're still not ready. And that's a really hard pill to swallow. And if you think that you're not going to have emotions in a demo account when you can't even be consistent in there, everyone is going to. I promise. If you can't even be consistent in a demo account after trading for many years, many months, putting thousands of hours into this craft, and you still suck, you think you're not going to be emotional? You think you're not going to be angry, that your pride's going to be perfectly fine, your ego's going to be intact? It's going to be a very humbling experience, and you're going to have emotion because you're following a very specific set of rules, following the model, building it up around this, and simulating it over and over and over again. And just like how we were talking about for the tape reading, when it's boring, that's the exact same process for demo. Once you're here and it's boring, and you can consistently do it, then you're ready to go into a live trading. Then buy an eval, or better yet, just start your own personal live account. There's no reason to do anything else. You shouldn't want to have to rely on anyone or anything else as a trader. That's the whole point of wanting to be a trader, not having a boss, not having to deal with clients, not having, even the salespeople. Even if you're in sales, you're still dealing with customers and you still have to be reliant on someone else buying your product. Here, we're totally reliant on ourselves if and only if we're trading with personal funds. And so that's what I've been doing recently, and just for a little bit of sauce on today's price action. And I had a video like this pre-recorded, but I figured I'd just redo it over. Inside of here at 9:30, we took the long higher executions on my Twitter through AMP. And all throughout this price trades up. This was a 15-minute that we traded to at open. So we obviously mark this out here. And inside of all of this price action, this shaded box here is a 5-minute. This is all for Burb, my wonderful Pookie Bear Burb. So inside of here, that 5-minute, why did I long this 946 candle as it's trading up over that 5-minute? Because if we're truly bearish, we wouldn't have done that. We would have stayed below 50% of that first presented. We would have just took a little short-term high out here and then rolled back over for a Cairo. But that's not what we do. We trade up higher with a strong close above 50%, and then obviously we inverse first presented. Everything inside of there is showing we're not weak. We're actually showing strength inside of here. We have relative equal highs here and up here. And as this candlestick is trading up and you're watching that strength occur inside of the market, 50% just gets completely ran through. Strong closure higher. Yeah, it's allowed to do that, but it shouldn't. I want to see some measure of a breakaway gap when I'm either bullish or bearish. So in this case, if I was bearish looking to trade into this low, then I would have wanted to see this upper portion be left open. Because we already traded here into that 15-minute. We've already worked below opening range gap. I would have wanted to see that opening range gap low be used as premium sensitivity. Instead, inside of here, as we trade back down into it here, it uses that opening range gap below. It should be like this. Use that opening range gap below right here, trade down into it, just slightly color outside into that 5-minute, and then we rip off higher. And so on personal funds, on personal brokerages, you don't have to wait for a withdrawal. That's same day. I can request that payout. And nothing is going to ever beat that, because you're beginning, you may not have the capital to do that. So build up accounts, build them up slowly with low leverage, see how that feels, condition yourself, go through the correct process. And then once you're able to walk your way into any prop firm, pass those accounts, get those payouts, you can slowly take those payouts and slowly build up enough capital to take a live account. Take that live account for yourself, not for another prop firm or anyone else, and be able to trade it and actually be free. Be free. And there's better tax advantages too, which I'm not an accountant. You have to go talk to one. So with that being said, the process is not what you want it to be. It's not what I wanted it to be. And especially after 4 years of trading, when I had to admit to myself that that's what I needed to do, 3.5 years, that's what I needed to do. It sucked, and I hated every minute of it. But what's the benefit? The benefit is, okay, well, now all of a sudden I can walk out there. I know, oh, look, relative equal lows, and there's a bearish fair value gap. Let me short that. No, I know it's going higher. You don't know that. You don't know why those relative equal lows are being left. You don't know why it went higher. And so that experience being built and being built and being built and witnessing that, it is the most beneficial thing for anyone. Unemotionally attached from the market. If I'm super attached to every single outcome, I'm now not worried about price. I'm not worried about learning price. I'm not worried about being better. But what I am worried about inside of that chart is I'm worried about my P&L. I'm not worried about anything else. Because all I'm thinking about, okay, if I can just make $800 today, then I can get 30% of the way done with my eval. I can almost get my withdrawal. And if I can just get one withdrawal, then I'll be good to go. Or if I can just pass this eval, then I'll be good to go. And that's a lie. If you can just do that, you're going to suck. You're not going to be able to do anything more than that. If you pass an eval, after that eval is passed, you're going to try and hold on to that PA so much because you can't afford to lose it. You need that account. And by needing to have that account, every single outcome, every single trade is elevated to such an Olympic level standard. It's such an Olympic level feat that you're not going to be able to control yourself. You're going to be too emotional, too attached to everything to actually execute properly. And that's going to lead you to blowing the account, which is why you have to condition yourself in the way that I went over, the way that ICT taught to went over it. And that proper process is how you lead to long-term success. And it takes a lot more time than you want it to, but you have to let time do that heavy lifting and not yourself. So with that said, there's not really too much else to go over with that. It's the simple process. Follow your model one day at a time, one smart, educated, thoughtful decision every day that adds up. And that's all you need to do. So be safe. God bless. And until next time.